Hello, my name is Isia Zun Nurani. NPM 23,411,066. Class Management 23. I will explain the material about definition of taxpayer rights and obligations of taxpayers and differences between taxes and levies. Definition of taxpayer. A taxpayer is an individual or entity, including taxpayers, tax withholders, and tax collectors, who have tax rights and obligations in accordance with the provisions of laws and regulations. This definition is officially regulated in Law No. 28 of 2007 concerning General Provisions and Tax Procedures, CUP. Taxpayers can be individuals, such as employees or entrepreneurs, or business entities, such as limited liability companies, cooperatives, foundations, firms, and permanent establishments, but in the context of international business, taxpayers are divided into two categories: domestic taxpayers, WPDN, which are taxpayers who reside or are domiciled in Indonesia for more than 183 days in a year, or business entities established and domiciled in Indonesia. Foreign taxpayers, WPLN, which are taxpayers who do not reside in Indonesia but earn income from Indonesia, such as royalties, dividends, or service payments. Taxpayer rights. Taxpayers have a number of rights protected by law to ensure that the tax compliance process is fair and transparent. These rights include obtaining an NPWP as an official identity in tax administration, filing for a refund if there is an overpayment of tax, filing objections, appeals, or reviews of decisions that are considered detrimental, obtaining guarantees of confidentiality of tax data and information from the tax authorities, requesting deferral or installment payment of taxes under certain conditions, obtaining services, guidance, and consultation from the Directorate General of Taxes. Taxpayer obligations. In addition to rights, every taxpayer also has obligations that must be fulfilled. These obligations include registering to obtain an NPWP, Taxpayer Identification Number, calculating, paying, and reporting taxes independently in accordance with the self-assessment system, maintaining accounting records or documentation in accordance with accounting standards and tax regulations, providing accurate data and information during tax authority audits, retaining tax documents for a minimum of 5 years, withholding or collecting taxes from others when required by regulations, such as withholding income tax under Article 21 for employees or income tax under Article 23 for business partners. In international trade, these obligations also include paying income tax under Article 26 for foreign taxpayers, import VAT when bringing goods from abroad, and import duties imposed on imported goods. Differences between taxes and levies. Taxes are mandatory contributions paid by the public to the state based on laws, which are used to finance general government expenditures without any direct compensation. This means that the benefits of taxes are indirect and felt collectively, such as infrastructure development, education, and health services. Taxes can be collected by the central government or local governments, depending on the type. This is usually the authority of local governments in accordance with Law No. 28 of 2009 concerning local taxes and levies. In the world of international business, taxes affect the cost structure and competitiveness of products in the global market, while levies are more related to operational costs in certain areas, such as port usage fees or cargo loading and unloading services. Connection to international business. Taxes and fees have a significant impact on the operations and strategies of international businesses. Taxes affect selling prices, net profits, and global marketing strategies. Multinational companies typically engage in tax planning to legally minimize their tax burden, including by utilizing tax treaties. Fees, on the other hand, are related to operational efficiency, such as payments for export-import permits, port usage fees, and logistics facilities. Changes in tax or fee rates can directly impact export-import costs and the competitiveness of products in international markets. Therefore, a good understanding of obligations and rights as a taxpayer, as well as the differences between taxes and fees, is essential for international businesses to manage their financial obligations efficiently and comply with applicable regulations.